Hello, good afternoon, and welcome to another exciting and important moment to talk about business. It is Business 360, and my name is Blyden Okem. On Business 360 this morning, we hear that China's second quarter GDP growth slows less than expected, and we begin from there. China's economy expanded 5.2% year on year in the second quarter of 2025, easing from 5.4% in the prior two quarters and marking the weakest pace since the third quarter of 2024. Still, the latest reading narrowly beats estimates of 5.1%, supported in part by Beijing's policy measures amid a fragile trade truce. Growth momentum in the second half is projected to weaken further due to headwind from trade tensions, deflation risks, and a prolonged property slump. To the US. The US government announced on Monday that immediately imposing a 17% duty on most imports of fresh tomatoes from Mexico after negotiations ended without an agreement to avert the tariff. Mexico currently supplies around 70% of the US tomato market, up from 30% 2 decades ago, according to the Florida Tomato Exchange. The duty stems from a long-standing US complaint about Mexico's tomato exports and is separate from a 30% base tariff on products made in Mexico and the EU that President Donald Trump announced on Saturday. Meanwhile, Trump threatens 100% secondary tariff on Russia. President Donald Trump warned on Monday that it would impose secondary tariff of 100% on Russia if a peace deal with Ukraine isn't reached within 50 days. He said during a meeting with NATO Secretary General Mark Rutte. The secondary tariff would penalize any country trading with Russia, allowing the US to impose steep duties on import from those nations. While US trade with Russia dropped to $3.5 billion in 2024, indirect trade routes remain significant. Trump proposed 100% rate is notable and notably lower than a Senate-backed bipartisan bill, the Sanctioning Russia Act of 2025, which seeks a 500% tariff on Russian imports and similar secondary tariff on countries buying Russian oil, gas, uranium, and petroleum. A Senate vote could happen later this month, according to Majority Leader John Tooney. Key U.S. partners potentially affected include China, India, South Korea, and Turkey. Meanwhile, President Donald Trump pressures Fed for deep rate cuts. President Donald Trump urged the Federal Reserve to slash interest rate to 1%, arguing it would reduce federal borrowing costs and boost the economic growth in that direction. The federal funds rate currently stands at 5.25 to 5.50%, where the Fed has held it to control inflation and prevent economic overheating. Dropping rates to 1% could represent the most aggressive monetary easing since the COVID-19 pandemic. Trump's call comes as federal debt servicing costs climb towards historic highs. While a lower rate could ease short-term interest payments on the national debt, economists warn that it could destabilize the economy and rekindle inflation. In Africa, South Africa's vehicle exports to the United States have plummeted in 2025, with sharp declines in April and May following introduction of steep import tariffs by US President Donald Trump. According to industry body NAMSA, the drop poses a serious threat to jobs and industrial hubs that depend on the sector. The US, South Africa's second largest trading partner and a key destination for domestically manufactured vehicles, has historically offered duty-free access through the African Growth and Opportunity Act (AGOA). That preferential access is now being eroded by Trump's escalating trade measures. although exports to the US fell by 73% in the first quarter of 2025 compared to the same period a year earlier. The situation worsened in April and May, with declines of 80% and 85% respectively, NAMSA said. NAMSA CEO Michael Mabasa warns of widespread disruption across South Africa's automotive value chain. In Ghana, the United States Department of Justice and the Federal Bureau of Investigation (FBI) have reportedly expressed support for the government of Ghana's request to extradite former Minister of Finance Ken Ofori-Atta, who has been declared wanted by the Office of the Special Prosecutor (OSP) and listed on Interpol's Red Notice database. The US authorities do not view the charges against Ofori-Atta as political persecution. The Office of the Special Prosecutor is probing Ofori-Atta in relation to several significant public sector contracts and financial decisions during his tenure. Meanwhile, Kenyans abroad are sending more money than ever. Kenyans in diaspora continue to play an important part in sustaining the country's economy, and with remittances reaching an all-time high of 5.08 billion US dollars, an equivalent of 656.99 billion Kenyan shilling in the year, leading up to June 2025. Remittances in June 2025 alone increased by 13.8% compared to June 2024. The Kenyan Central Bank noted remittance growth as a key contributor to foreign exchange earnings. August 2024 saw a significant rise in remittances, showing optimistic perspective from the diaspora. And I will go on a quick break, and when we're back, Business 360 continues looking at Nigeria's perspective and its businesses. Don't go anywhere. Welcome back. It's still Business 360, and my name is Vladimir Kim. And now let's look at the businesses around Nigeria and the indices in it. Africa's richest man files to build seaport for next phase of empire expansion. Africa's richest man, Ikot Dangote, is moving ahead with plans to build Nigeria's largest and deepest seaport in Olokola, Ogun State, about 100 kilometers from its massive fertilizer and petrochemical facilities in Lagos. The seaport aims to enhance Dangote's logistic capabilities and complement his fertilizer and petrochemical operations. Multiple reports indicate the initiative includes plans for liquefied natural gas export with pipeline construction from the Niger Delta. Still in Nigeria, Nigerian petroleum products marketers have announced a reduction of premium motor spirit prices starting from today, Tuesday. This comes as the economy shut down today owing to the public holiday declared by the federal government to honor ex-president Muhammadu Buhari, who recently passed away. The national president of the Independent Petroleum Marketers Association of Nigeria, Abubakar Maigande, disclosed that the decision to cut the petrol price comes after members of IPAN held a meeting in Abuja on Monday in response to Dangote Refinery's ex-depot price drop to 820 naira per litre from 840 naira. Maigande noted that most of its members have agreed to review the retail price of petrol downward from Tuesday, which is today. Specifically, Maigande said IPAN members in Abuja will, from Tuesday, dispense petrol between 900 naira and 920 naira per litre, down from 905 naira and 945 naira. Meanwhile, the Central Bank of Nigeria has announced Monday and Tuesday, July 21st and 22nd, 2025, as the 301st Monetary Policy Committee meeting. The Apex Bank disclosed this in a notice released on its official website. The MPC meeting, which is CBN's high decision-making body, would meet in Abuja to take on the country's interest rate and inflation. Accordingly, the Apex Bank will decide whether to sustain the interest rate pause or other monetary policy measures or tightening measures. Nigeria's inflation rate fell in May to 22.97%. In the 300th MPC meeting, the Olami Cardoso-led CBN retained the interest rate at 27.50% upon the inflation rate drop. Selling Nigeria. 8 Nigerian banks incurred a combined 156 billion naira in impairment charges on credit and financial assets in the first quarter of 2025, according to an analysis of the unaudited financial statement filed on the Nigerian Exchange Limited recently. The impairment charges, often referred to as loan losses or credit losses, reflect provisions set aside by banks to cover potential defaults and deterioration in the value of their financial assets. The figure represents the cost of risky lending and exposure to a volatile macroeconomic environment, including inflationary pressure, naira depreciation, and constrained consumer, as well as business liquidity. A bank-by-bank breakdown of the data shows varied exposure levels and provisioning strategies, with some banks reporting significant declines in impairment charges, while others recorded notable increases. A period under review, Zenith Bank recorded the highest impairment charge among the 8 banks, posting 49.38 billion naira for the period ended March 31st. This marks an 11.8% decline compared to the 55.97 billion naira reported in the same period of 2024. Meanwhile, metering gap persists amid 187,000 meters in the first quarter installation. And despite the various initiatives aimed at tackling estimated billing and enhancing customer satisfaction, over half of Nigeria's electricity consumers remain unmetered. The Nigerian Electricity Regulatory Commission said in its latest report on the sector that a total of 187,194 meters were installed in the first quarter of 2025, reflecting a marginal increase of 0.41% compared to the 186,431 meters installed in the last quarter of 2024. This brought the end-user metering rate in the country to 46.98% as of March 31st, 2025, up slightly from 46.57% at the end of 2024. The data was contained in next first quarter 2025 report indicated that the bulk of the new meters were installed under the Meter Asset Provider Framework. According to the report, performance varied widely among the 12 distribution companies. Ikot Electric led the pack with the highest metering rate of 78%, followed by Abuja Electricity Distribution Company with 72% and Ikot Disco with 64%. In contrast, Yola Disco had the lowest metering coverage with just 14% of its customers metered. While IMF predicts a 0.5% GDP revenue loss for Nigeria. The federal government may lose as much as 0.5% of the country's gross domestic product in revenue following its decision not to raise the value-added tax rate. The International Monetary Fund disclosed this. In its latest Article 4 consultation report on Nigeria, the IMF stated that although the recent tax reforms approved by the National Assembly and President Bola Tinubu represent a major step forward in modernizing the VAT and company income tax regimes, the choice to maintain the current VAT rate would lead to an immediate revenue shortfall. The decision not to raise VAT rates now is reasonable, given high poverty and food insecurity, and with a cash transfer system to support the most vulnerable households not yet fully rolled out. However, this will reduce consolidated government revenue by up to 0.5%, 0.5% of GDP in the authorities' estimates, the report noted. While the federal government is expected to be largely insulated from the fallout thanks to expected gains from the improved CIT compliance, the blow will be felt most by states and local governments. And I will go on a quick break, and when we're back, Business 360 continues, looking at global economic standings around the world and the markets. Don't go anywhere. Welcome back. It's your Business 360, and my name is Vladimir. And out of global economic standings around the world and the market, we begin with the state of Cape Verde as inflation rate is at 6-month low. The annual inflation rate in Cape Verde eased to 1.8% in June 2025, down from 2.3% in the previous month. It was the softest rate since last December, driven primarily by slowdown in food prices, which saw the smallest increase in 6 months and a decline in transport costs. Inflation also moderated for clothing and footwear, alcoholic beverages and tobacco, leisure, recreation and culture, and miscellaneous goods and services. Meanwhile, inflation accelerated for housing, hotels, cafes and restaurants, and household equipment and current home maintenance. On a monthly basis, consumer prices rose by 0.2% in June after remaining flat in the previous month. And now let's look at the charts indicating Cape Verde's inflation rates. The charts indicates inflation rate in Cape Verde has its ups and downs as inflation previously standing at a lowly level, dropping to a 1% in September and before beginning September last year before beginning to build up higher and higher, and a bit of a slowdown from the last 2 months in terms of inflation in Cape Verde, indicating improvement in the currency of the country as well as the cost of commodities reducing in the last 3 months. And now to the commodity market as oil falls for a second day. WTI crude oil futures dropped to around $66.60 per barrel today, extending losses from the previous session after US President Donald Trump gave Russia a 50-day deadline to agree to a ceasefire, easing concerns that new sanctions could disrupt global crude supplies. At the same time, Trump announced new weapons for Ukraine, which would include a Patriot air defense missiles Kiev has urgently sought. The prices were also pressured by concerns that US tariff could slow global economic growth and reduce energy demand. Data from China, the world's largest oil importer, showed its economy grew at a slower pace in the second quarter, but just ahead of expectations, in part due to a fragile US-China trade truce and policy support. And now to the market, the energy market first, afterwards industrial, agricultural, metal market, the energy market. Energy market indicates the price of US crude at $66 per barrel this afternoon, a decline for the US crude. Brent, which represents Nigeria's price benchmark, the price level stands at $68 per barrel, falling by 0.355 points. And now to the industrial market. Industrial commodities. Well, while anticipating industrial commodities, the price of bitumen stands at 3,617 Chinese yuan per ton, falling 32 points this morning. Cobalt, no significant change in the market at $33,335 US per ton. A lead price falling by 9.15 points at $1,996 US per ton. And now to agricultural market. Agricultural market indicates the price of soybeans at $997 US per bushel. A soybean price dropping 3.21 points, wheat price also falling 2.56 points, and lumber falling 20 points, palm oil price dropping 72 points at 4,156 Malaysian ringgit per ton, the price of palm oil. Quickly, let's go to the different market, talking about the dollar. The dollar holds firm ahead of key inflation rates. Well, the US dollar index held above 98 today, hovering near a 3-week high as investors awaited the June consumer inflation report that could provide clues on how the Trump administration's tariffs have been affecting prices. Well, quickly, before we get into further details regarding Federal Reserve Chair Jerome Powell, as he recently indicated that inflation is expected to rise over the summer due to tariff pressures. Now to the market, the Euro-USD market, and afterwards the state of the Naira and cryptocurrency. The Euro-USD market this morning. Euro-USD market, price level stands at 1.167 point mark, a slight gain, 0.11% increment for the euro against the US dollar. And the pound also gaining 0.16% against the US dollar, 1.34 point mark. Similarly, let's look at the state of the Naira. The Naira rebound to 4-month high. A straight stands at 1,518 per dollar yesterday. The US dollar against the naira price level stands at 1,531 naira to the US dollar this morning. The dollar are gaining 3.5 points over the naira, so the naira struggling this afternoon after recent gain, especially yesterday. The euro against the naira price level stands at 1,789 naira to the euro gaining 7.9 points over the naira, and the pound gaining 8 points over the naira. Now quickly, let's look at the state of cryptocurrency markets. A crypto market indicates the price of Bitcoin as 117,012 US dollar. Bitcoin falling wholly, a 2,865 point drop, negative 2.39% today's drop this morning for Bitcoin. The crypto market is totally negative. Ether falling by 43 points at 2,970 US dollar for one Ether. Binance dropping 9.4 points. Cardano, Solana, Ripple all falling this morning. Well, it's the story of the market and the direction that comes with it. And here we draw a curtain in today's edition of Business 360. Thank you for being a part of it. My name is Badminton, and thank you for watching.